Hey guys, welcome back. Now, with crypto prices going up, going down, is this the time it's going to break out? Is this the time it's going to break down? And altcoins too, taking a bit of a hit. It's easy to get caught up in all the FUD. And so in this video, for those interested, I'll be sharing my framework for the next 12 months, which is keeping me calm, keeping me cool during this turbulent time. Now, this framework is based on what's happened in previous cycles, and so some very important points. Remember, a map is just a map and it's not the territory. This is based on previous cycles, and so although I think it's more likely than not to repeat, it's not 100% guaranteed, and is based on my personal situation and goals as I fully plan to exit the crypto market and buy back in at a later date. Okay, so let's jump right in, take a look at the big picture overview and see what the crypto market might look like over the next 12 months. And so essentially what I have done is I've built a plan based on what has happened in the past. So it's data driven, and also it's built around the halvings. As the halving that's just gone a couple of months ago, we've had 3 previous ones. And historically, this has been a big pivotal time in the crypto market, and it does have a big impact on what happens. So zooming out, this is what happened after the first halving, and we get to see the entire cycle as it plays out. And this is what Raul's referring to, the banana zone, which happens at the end. So this was the first one. This was the halving, and from the halving to the absolute peak, it was 12 months. Cycle number 2, this was in 2016, and again, when we zoom out, we can take a look at exactly what happened from the halving to the peak, and it's pretty much the exact same picture. However, this time, instead of it being 12 months, this one was 18 months, so a year and a half. But as you can see, it's pretty much the exact same picture. And then again, 4 years later, we had the halving of 2020, and this one was interesting because although it's pretty much the exact same picture, this time we had the run and the cycle top after 12 months, but we also had a bigger cycle with the absolute top after 18 months. So first time round we had 12 months, second time round we had 18 months, and third time we had both. So that is the first main point. Now, going back to the first one again, what we can do is we can split these into quarters. So in 12 months, we can have quarters. So the first 3 months, the second 3 months, third 3 months, and the last 3 months. And what do we notice? Well, in the first 3 months after the halving, it pretty much looks like a flat line. And in comparison to what's coming, everything in the first 3 months pretty much is irrelevant. And then as we build, the second quarter, third quarter, and the fourth quarter is the blow off top. Again, looking at 2016, now this one's going to be 6 quarters. So we've got our 4 quarters to 1 year, and then we may get an additional 2 quarters. So another 3 months and 3 months. However, even with the additional 2 quarters, we can see that the first 3 months, July, August, September, again, the first 3 months, pretty much nothing happens. And in comparison to what's coming, it again looks pretty flat. And the same for 2020. First 3 months, so May, June, July, you can pretty much see the first quarter, nothing is really going on. It looks pretty flat. It looks pretty irrelevant. Well, guess what? We're just coming to the end of the first quarter. If the last halving was in April, that's April, May, and June, and we're just coming to the end of June. So it just means we're completing this first quarter where nothing really happens. Again, 2016, July, August, September, nothing really happens. And again, 2012, first 3 months, nothing really happened. And so we're just about to enter Q2. Now, on to the next important point. So this is the latest price action that's going on right now. And as you can see, you may say, yeah, but this isn't just flat. This is incredibly volatile. We're having huge breakouts. We're having huge breakdowns, breakouts, crashes. This time is different. This time it's very uncertain. This time it's incredibly volatile. Well, it only looks like this when you're zoomed in. So let's now flip back to the first halving. And if we zoom into the first 3 months, what do we see? Crazy volatility. This was 2012. The first 3 months of 2016, it looks like a bloodbath. We have massive drops going into the halving, sideways action, fading down, another massive scary sellout, which was probably freaking people out at the time. Big runs, long sideways consolidation, big runs. So actually at the time when you're going through the first 3 months, it's incredibly volatile. And the last one, 2020, it's not a straight line. At the time, going through it, it's massive runs, it's massive drops, up, down, sideways, fading down, breakouts. So although in hindsight, once the full cycle has completed, the first 3 months looks flat, at the time, it's incredibly volatile, which is what is going on right now. And so it's this information that helps me keep calm and cool. So putting it all into just one simple picture, this is pretty much the one-page framework which I am keeping my eye on, and these are just my personal targets put in the background. If this were to happen in Q2, Q3, and Q4 of the 12 months, then I will have hit my personal targets. But the reason I'm able to stay calm and cool is that I know in hindsight, once we have the next year's worth of data, then all this crazy volatility and big crashes that are freaking people out right now, it's very likely going to look like this. It's not really going to matter. So this is what each day I remind myself of. And if I'm particularly feeling fearful, I'll simply pull up this chart and remind myself we are still very early in this cycle. And you don't have to take my word for it. Just this last week, the new CEO of Binance was basically saying the same thing. He was saying,
no, I think that we are in the early stage of this particular bull cycle, and that's my view, right? So,
and basically for me to hit my personal targets, firstly, we have to get back to the peak that happened about 3 months ago. So altcoins have seen quite a big drop. However, once we get back to the previous peak of 3 months ago, then in Q2, so for the next 3 months, July, August, and September, my portfolio only needs to increase 25%, which in crypto can happen in 1 week. Then Q3, the portfolio only needs to increase 33%. Again, that's about 10% a month, so very achievable. And then if we do get a nice big blow off top, a 50% increase, then I will have personally hit my income target and be out of the crypto market. So this is just based on my personal situation and goals, which, as you can see, is actually very achievable. And final thing to point out is that this is based on a shorter cycle, so twice it has hit 12 months. But I'm well aware that the crypto market doesn't give a damn about my personal goals. And so if it does go to 18 months, it may go to 20 months, 24 months, who knows? I will have to adjust to the market. But my personal strategy is to be early in. I was buying all throughout crypto spring and be early out. So ideally, it's about April 2025. Ideally, I'd like to be out of the market. So end of March is going to be a key time frame for me. But I'm well aware, depending on what's happened, if there's just been a major crash, then I may have to wait longer, a few more months, for things to recover and set new highs. And to finish up, this was a chart recently released by Raoul Pal, Real Vision, and it's essentially just showing the same thing. But the period that we're in right now, this May, June, July, this is what they're calling the boring zone. So you can see, I think this is overlaid from the cycle 2017. Pretty much from this point here in 2017, we had 1, 2, 3 months, 3.5 months of prices not going anywhere, which is probably why they call it the boring zone. So this is the part that we're in right now. And again, this is why we are actually still early in this cycle. And it's July, August and September, which is what I am calling Q2, where we should then start to see the first breakout moves that are coming. So stay calm, stay cool, stay optimistic. Although altcoins can crash hard and fast, they also, when things turn around, will jump up very fast as well. With the crypto market doing its usual choppy dance up and down after the halving, this can make a lot of people feel quite nervous. This video was the map or framework I am using in the background, which helps me keep calm and cool during this turbulent time. Essentially, the 3 previous cycles have taught us that the 3 months following the halving, although very volatile at the time, will become flat and irrelevant once the rest of the cycle plays out. It's October, November, December, January, February, March, where I will be paying very close attention, as if history repeats, this is when some major fireworks will be going off. And as for the next 3 months, so July, August and September, we should start to see some big moves as we begin to leave the boring zone and enter the early part of the banana zone. So hold on to your hats. So there you are, guys. Hope you enjoyed. Now, this framework is helping me stay pretty chilled, so hopefully it can do the same for many of you. If you do have any questions or comments that you must get answered, then simply write them below. However, just remember to get rid of 100% of the comment spam and trading bots that plague YouTube comments. We are trying out the new SuperThanks Commenting system. So to get your question or comment read and replied to, or just to say thanks, then use SuperThanks below. And for now, just to say, if you did enjoy anything in the video, then drop a like, and a big thank you to everyone who does, and I'll see you in the next video. Bye for now.